those underwriting systems. And all of a sudden, he calls me up and he's like, Merrill, I cannot believe, well, I don't know what you did, but this is magic. And I'm like, tell me what's going on. And he said, I walk in last week to visit to make a deposit. And as soon as I walk through the door, been there for 7 years, the bank manager comes up and shakes my hand and said, hi, Tom, my name is so-and-so. And hey, we should go to lunch. And he's like, what the hell is going on? I don't know what's happening, right? And what happened was that, and then I just explained to him that it wasn't that he had to do much different. He just had to do it the right way. And then it triggered the underwriting software, and the underwriting software translates it into the 3D world we live in by an email saying, by the way, this is a customer of interest. Take care of this customer. And he's like, it was good. And he picked up an $80,000 business. It was 50 and a 30. So at that institution, it was a 50, but between two institutions, his first round of funding was 80 grand in unsecured stated income business lines of credit that do not report to the personal profile. So that's a perfect example of just triggering the right behavior. And all of a sudden, the branch manager's out there asking him to lunch.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Merrill Chandler. Merrill is the founder and CEO of GetFundable.com. Merrill has been an influential player in the credit restoration industry for over 21 years and have co-founded numerous successful credit restoration firms around the country, including Lexington Law. Merrill, thank you so much for joining us on the show. And how are you, my friend?
I'm doing very well. I'm glad to be here. I'm glad to talk to your listeners and your viewers about kind of how to avoid stepping on landmines that we don't even know are there, right? And how to get funding in ways that they never even knew was possible. So thank you for inviting me.
Absolutely. This is a topic that really resonates with me. Right before we kind of hit the record button, was kind of talking about a little bit of my story of I kind of got into the credit restoration / get business funding and didn't have a really good experience. And he was like, oh, that's the old stuff. So I'm like, I'm glad to get you on so we can talk about what's current, because your boots on the ground and we can learn a lot from you. But before we kick things off, would you mind kind of sharing for the listeners a little bit about your story and more about your company?
Absolutely. So, as I said, in 1992, I co-founded Lexington Law Firm. So it's been 25 plus years that I have been in the borrower lending space, right? But back in the day, credit repair was like the wild, wild west. And while we could get lots of deletions, I soon learned that you cannot repair your way to funding. You can't take off a few collections and a charge off, and all of a sudden somebody say, hey, here's a mortgage. Oh, get a business line of credit, right? You can't repair your way to fundability, what we call fundability, or becoming fundable. And so I branched off from Lexington, and because they were content with the credit repair space. And I wanted to actually help my clients, help borrowers get the money they need to fulfill their dreams, right? Whether the homes, cars, the business expansion capital, whatever it was. I wasn't okay with just leaving it at, a few deletions, right? And so that's how it started. And so over the last 21 years, we have been working on what I call fundability optimization, because it doesn't matter. And here's kind of the new framework that you and I were kind of talking about earlier. We've been trained by the system to think about a good credit, bad credit, right? I got good credit. I got bad credit. I got a good credit score. I got a bad credit score. Do you realize none of that matters? It's whether or not you're fundable or not fundable. Will a lender give you money? Nothing else matters. Your score doesn't matter, because I have clients who have 800 plus credit scores and can't get a dime because
Mm,
we've been led to believe that scores drive approvals. It's not true. The first 3 to 4 metrics that lenders and FICO use has nothing to do with the score. That's number 4th or 5th, right?
mm,
Sometimes 3rd or 4th. And your FICO score determines your rate and maybe the term, not the approval. Lender software, lender underwriting systems all approve you. FICO helps you get what tier it's in and the rate and term you're going to get, right? We have it all backwards. We're not trained about that. So we're thinking, oh, yeah, I got a 760 credit score. And then we get disappointed wondering why the hell we're not getting an approval.
mm-hmm.
So that is what getfundable.com is about. That is what we're about, is educating people about what lenders are actually measuring and how to get approved, period. I've got people getting approved in the 660s, and I got people finally getting approved in the 800s. They've had 800s for years, but they weren't fundable. Does that make sense?
Oh yeah, absolutely.
Fundable versus a good credit score or good or bad credit.
So can we dive a little bit about what this actually fundable is? Like, what are the metrics that they're looking for? And you mentioned a whole bunch of different things that's different. So can we start off as far as kind of like, I mean, most people that are listening or own a business, real estate investors are aspiring to get in. And I always tell them it's better to get kind of your funding in place before you say, hey, I'm a real estate investor. Now let me go look for financing. Let me get that process started first. So can we talk about kind of like, what's the stepping stone of getting this thing approved, or what these people are looking for?
I'm going to tell you, your listeners, listen to this man, because the deals come, especially when you have the funding in place, right? The deals will always come, but how many of you don't have the resources to be able to take down the deal or grow the business or buy the next franchise or whatever it is, right?
Mm-hmm.
So yeah, wise counsel. See, to be fundable, their FICO measures 40 characteristics of your borrower behavior.
Mm-hmm.
Okay, 40 of them over the course of a 24-month look back period. So let me tell you kind of I'll step back, and this is the most important power transfer has occurred over the last 10 years, since 2008, since the crash. We talk about the wealth transfer, all the real estate that got taken back and foreclosed on, but the most powerful funding power transfer has occurred in that same 10-year period, because for 500 years, lenders would require proof to approve you, right? You fill out an application, and then you got document. We call it full documentation or full doc. But what they're doing is they're proving every one of your data points on your application.
Mm-hmm.
Are you BSing them? Are you lying, cheating? Whatever. That's what full doc is proving those data points. Interestingly enough, over the last 10 years, every lender has been losing money every time they manually underwrite a loan. For example, I went to FICO. We'll talk about that later, but next month I'm going to my 3rd FICO World Conference, where I get to talk to the people who are actually designing these algorithms and these processes for lending approvals, right?
Wow.
Well, when we're back there, I learned that these 40 characteristics that are being measured over the course of 24 months, these lenders have written software to take over the approval process. Because like this vice president of SunTrust Bank tells me, or is in the breakout sessions, and she said to make money, SunTrust had to write a $38,000 loan for 3 years at 6.5% to break even.
Wow.
They can't give a profitable $20,000 loan or a $10,000 loan. It has to be $38,000 because it was so expensive to have a human being verify those data points. So the breakout session was about manual versus automatic underwriting. Everybody's moving to automatic underwriting systems, what are called AUSs. Everybody, because they don't want human beings involved in the audit, in the funding process, right? They lose money when they do. Well, so all of this documentation has been replaced by software that measures our behaviors, these 40 behaviors over 24 months. Interestingly enough, they can verify our income without us submitting pay stubs. They can verify all the data points that are on our application now through this automatic underwriting system. That's why we get approved in 30 seconds for a $20,000 credit card or for a $15,000 commercial loan, right? In seconds. Well, here's what's fascinating. If there's 40 behaviors over 24 months and all the lenders are moving this approval authority to the software, then if you know what those behaviors are, who now has the approval authority?
You do.
We do. Your listeners have 100% of the approval authority, because if they align their behavior with these metrics, and they're simple, that you just got to know what they are. But the second you align your behavior with those metrics, you now know how to get approved. Over and over. And that's what I teach my students. That's what I teach my clients, is how to get approved and how to align your behavior. So that's the magic of fundability. That was a very long answer to a very short question, but that's what being fundable is aligning our behaviors with those criteria. Approvals are waiting for us because they don't want a human being looking at it.
Wow.
They don't want a human being looking at it. And that's why and your listeners, I'll ask them a question. You've had the 30-second approvals, right? The 2-minute approvals. But how many of your listeners have received an email or a letter in the mail saying, congratulations, we just gave you more money? No income verification, a bigger credit line, no inquiry, nothing. Congratulations, 500, 5,000, it's yours, right?
Yeah.
We've exactly. That's called automatic limit increases. How do you get those? And how would you like a business line of credit at $50,000 to automatically grow over time? In the same way their personal credit cards are growing. It's all part of the software. Know the rules of the game, you can win the game, right? So,
wow. That's awesome.
Long answer.
So for those kind of like those 40 data points or characteristic models that they're looking at, because that differs, because we're talking about like credit cards, lines of credit, and then there's different tiers, I understand, as far as kind of like the amount that you get. Can you kind of dive a little bit deeper into that?
Yeah. So there are, again, this is where your FICO score comes in. The amount of the approval and the rates and terms many times, not always, but many times are FICO score driven. So the higher the score, the higher the amount, but the approval process is not FICO score driven. So some of those criteria, the higher, when you have a higher credit score and it's based on a sound foundation, right? You can't, if it's just a bunch of retail cards, you can still have an 800 score, but no, I mean, Chase Bank is not going to give you a $50,000 business line of credit on your Home Depot reputation. It's not going to happen, right? That's why I have clients coming in going, I don't know why I'm not getting approved. Why can't I get approved? I've got an 820 score because it's built on the wrong type of profile. So I go over in my boot camp and in my book, all the places where I'm trying to get the word out. We go over the quality of your personal credit identity. If you have multiple names and multiple addresses, you're just confusing the software because it's not a human being anymore looking at your driver's license going, yep, Merrill Chandler. Okay, I believe that's you. You got data points that are being measured. And if you have Merrill Chandler, Merrill R. Chandler, Merrill Ray Chandler, those are 3 different people to the software. So we've got to dial in our data points for our identity. You have to have a quality revolving accounts portfolio. The type, if you have the perfect portfolio is 3 to 5 high value credit cards, but a bunch of us didn't know any of this. And so we brought in all the American Expresses and the Discover cards, which are all lower tiered, less valuable cards to the software systems, right? Especially all of the oh, bless our hearts, we don't know what we don't know, right? And our
Mhm.
lenders didn't teach us how to play this game. We've been stumbling in the dark, right? And so it's not your fault, listeners, that lenders have not done their job about teaching us what makes a qualified buyer, a
Mm.
qualified borrower.
Wow.
But we need a solid and powerful revolving accounts portfolio. We need the third thing. We need an installment loan portfolio that creates ballast. Ballast is the weight that keeps a ship in the water, right? So it doesn't tip
Mhm.
over. We need a powerful, and there's certain prerequisites to having a good installment loan portfolio. Then there's inquiry usage, right? We can actually use more inquiries than most of us believe if we know how to do it, right? And so those, and then there's the 24-month look back period in all of those areas. So it's a lot of data points. I'm a credit geek, I'm a fundability geek, but if we know the rules of the game, we can play this game, we can master it, and we can win it, right? And then we can be in charge of our own approvals.
Wow. That's yeah, it just went it's just like I said, it's so over the top as far as like the different stuff that like you had just mentioned that I had no idea because the conventional wisdom is this, good credit score, you can go out and just build up over time that I didn't know that you have that possibly there's like 40 different things that you can fix in order
Yep.
to and as far as kind of like the types of I mean the types of credit terms and stuff like that, is that I can't say recourse or non-recourse, but what's kind of like the different
Well,
stuff that's
yeah.
available?
Well, first thing, since 2008, there's no such, unless you've got a Standard and Poor's corporate credit rating because you're a $10 million business for the last 5 to 10 years. We borrowers have to count on having being personal guarantors on every dime that they borrow of what
Hmm.
I call cash accounts, right? Cash
Hmm.
credit lines, loans where you're getting cash. You don't have to be like the Dun and Bradstreet build your business credit stuff for Paydex. Oh yeah, I can get a Savers business credit card and a Staples business credit card without personal guarantee, but those are all merchant accounts, right?
Hmm.
They're merchandise backed accounts. We don't want those. Those aren't going to help us do a deal or grow our businesses. That's not what we want, right? So
Hmm.
those are we are going to be personally guaranteeing all of this stuff, all
Mm.
of it.
All right, sounds good. Can you kind of give us maybe? I know you worked with thousands and thousands of people, but can you give maybe an example of a client that utilized this process for buying investment real estate?
Oh, absolutely. So I've got a couple of really good ones, and I'm gonna go on the low end and on the high end because we have what's called we call it the $1 million funding formula.
Mm.
We call it a $1 million funding formula because in this automatic underwriting environment, most banks that we vet and we have lists of these banks, they go up to $100,000 in stated income and unsecured business credit lines or business loans,
Mm.
unsecured. Now, the reason why I can say stated, people are like, stated, what do you mean? Because their software is looking back at 24 months of your behavior. If you trigger every one of those positive flags, they'll give it to you stated. Their underwriting software will give higher approvals than manual underwriting will because they trust that software implicitly. So many of our clients come to us and they're like, yeah, I want to get the $1 million. So I'll give you some examples. I want $1 million in business lines of credit. And I'm like, all right, let's start. That means that's 10 banking relationships. Can you handle 10 banking relationships? Because I can show you how to implement the formula with every single bank. And there is a process that you have to trigger all the underwriting conditions that a lender
Mm.
works with, right? So I call him Tennessee Tom. Guy comes to me and he's been banking with the same bank for 7 years. No joke, 7 years. And the tellers, hi, treat him like good customer service. He starts running the $1 million funding formula and starts running what we call traffic patterns. There's a traffic cascade that you use funds at your discretion to trigger the underwriting criteria. There's what are called depositor ratings. Banks grade every single depositor for what their average daily balances are. I mean, there's a lot
Wow,
of
that's
cool
deep.
stuff
Yeah.
going on in the background, right? So, but we tell them how to trigger those underwriting systems, and all of a sudden, he calls me up and he's like, Merrill, I cannot believe. Well, I don't know what you did, but this is magic. And I'm like, tell me what's going on. And he said, I walk in last week to visit to make a deposit. And as soon as I walk through the door, been there for 7 years, the bank manager comes up and shakes my hand and said, hi, Tom, my name is so-and-so. And hey, we should go to lunch.
Wow.
And he's like, what the hell is going on? I don't know what's happening. Right. And what happened was that, and then I just explained to him that it wasn't that he had to do much different. He just had to do it the right way. And then it triggered the underwriting software, and the underwriting software translates it into the 3D world we live in by an email saying, by the way, this is a customer of interest. Take care of this customer. And he's like, it was good. And he picked up an $80,000 business. I was 50 and a 30. So at that institution, it was a 50, but between two institutions, his first round of funding was 80 grand in unsecured stated income business lines of credit that do not report to the personal profile. So that's a perfect example of just triggering the right behavior. And all of a sudden the branch manager's out there asking him to lunch, right?
Wow, that's a cool story. Kid calls you. It's like, what is going on here?
No, it was hilarious. We have people all the time. And another couple, Derek and Aisha, superheroes in the real estate investment world, but they have what's called a qualified funding entity. That's one of the kind of tricks of the trade. It's not a trick of the trade. We change our students and clients' framework from trying to fund deals to becoming a fundable entity. See the difference?
Mm-hmm.
Lenders are not going to fund your real estate deals. It's too risky. But will they fund you, the genius behind the deals? Yes, they will. But you have to set it up in a way that creates that again triggers these underwriting opportunities, right? So he comes to us. We get an email from them. Is a little less formal. They just send an email and say, "Oh, by the way, we just got a $580,000 real estate acquisition credit line."
Wow.
Plus 90 grand in regular business lines of credit from the two banks we were working with.
Wow.
And I'm like, yes, right? My most successful client to date, I've got a number of people over the million mark, but in client fundings, my most successful is $3.6 million. A gentleman, Michael J. in Louisiana, and he is slaying it. He just keeps picking up more business lines. Here's the thing. We feel that there's this adversarial relationship between borrowers and lenders, right? In the back of our mind, we're like, oh, they got the money. I want the money. I'm a good person. But when do lenders make money?
When they lend it.
When they lend.
Yeah.
So they're not lending opposed. They're not anti-lending. They're just pro sure thing.
Yes.
Right? So if we give them a sure thing, they will lend to us. And how do they know we're a sure thing? Because we hit those little software markers for 3 months, 6 months, 12 months, and 24 months. You don't have to wait 24 months. The first behavior changes are at month 3, then month 6, then month 12. There's an exponential growth in the value of your behavior over time. All we have to do is start that first 3 months, and all of a sudden it's like, oh, hello, Tennessee Tom, come on in. I'd like to go to lunch with you. That's what happens. Wow.
So like, say for example, after that 3 months, you get maybe, I'm just throwing out a number, $10,000 or whatever. So are we, people are in your program are taking that next step and then keep building it from there? Or are people just waiting the 3 months and then waiting to maybe 24 months?
No. We have a principle that we talk about in our boot camp. It's called the velocity of credit. which is different than the velocity of money. The velocity of credit says that for every month you spend focusing on your personal credit profile, you shorten the time significantly to funding. Because and I guess this is the best place to talk about it. I've met with the CEO of FICO, and in that conversation we had a discussion. He asked me about my business model. I said, you guys optimize lending. Well, I optimize borrowers. I make borrowers fundable. And he was, we had a conversation for the last of like 10 minutes. And then he said, let me have you talk to my score development teams. For the next 3 days, I met with the business scoring liaison and the actual FICO credit score development team.
Wow.
Met with them. I got to ask 100 questions, and I had very high advanced questions because I've been reverse engineering this now by that time for 16 years by that time. And so met with them. This, like I said, next month I'm going for the 3rd time to FICO World Conference, and I'm meeting with teams again to tighten up our offering. The ability to understand what they're measuring. They made me sign an NDA just between us church mice. They made me sign an NDA because I know stuff that I came to the I drew the same conclusions that their software was designed to draw. Does that make sense?
Mm-hmm. Yeah.
And I've honored that in every way. But the point of this is that when you get these fundings, this time to money, they told me that 80% of all business funding decisions by a lender, 80% of small business lending decisions is based on your personal credit profile. Only 20% look at the data points of your business.
Wow.
So that's straight out of the mouth of the Small Business Administration liaison at FICO. And I believe him. So we optimize our personal credit profiles for business lending. Does that make sense? We want to look good to business lenders, but the data points that they have are on our personal. So many people, one of the myths out there is that lenders look at your business to give you a business loan. Not true. They look at how you treat other people's money through your personal profile because their behaviors. Remember, and our behaviors derive from our beliefs.
Exactly.
They're measuring our money beliefs through the software and approving us or not based on how we show up.
Wow. That's, like I said, I thought was the complete opposite. And especially when I told you about when I did some consultation with another company, it was the opposite. So hearing this now, and then you hearing it from the horse's mouth is like further proof. It's like, you're like the complete insider. It's like, this is the process. And it's like, wow, this is amazing.
Well, I have 2 religious metaphors. One's Moses coming down with the 10 commandments from the Mount Olympus of the credit gods, right? Or Muhammad coming down from the mountain just saying, you know what? There is a new sheriff in town. It's not what we thought it was. So that is FICO World Conference is the Mount Olympus of the credit gods, right? I mean, it's just they're making policy, and I'm in the classrooms where they're teaching that policy. Okay, let me just make sure my borrowers meet those policies, and it's good to go after that, right?
Absolutely. So what's kind of like, what step number 1 for people to kind of get started is like, look, I need to do this. We need to get started on this. What's kind of like the process you recommend?
Well, first of all, there's kind of 3 beginning points, right? And I have a podcast. I don't want to take any listeners from you, but I have a podcast that is.
Oh, we're going to put in the show notes. Absolutely. This is they're going to get a lot of good information. So I'm definitely going to make sure this is in the show notes.
I have a podcast, and it's called Are You Effable? Or the new F word, right? Is fundability, fundable. And so it's Are You Effable with the asterisks, and then able. And then I also have a book that's coming out. You can pre-order it. It should be ready actually 2 weeks from now, the 1st of November.
Good timing.
Yeah, the first, and it's also the same name, Are You Effable, or the new F word. and that is you can go to um, fundinghackers.com/book, or
Awesome.
just go to getfundable.com and click on book. It's right there. We also do boot camps, right? $97. You can spend 2 full days with me on a weekend once a
Mm.
month, and I will teach you how to become fundable. So podcast, the book, the boot camp, it's low barrier of entry. We want people to come and learn the tech. We have coaching programs, but I don't even talk to you about coaching unless you are hardcore about becoming fundable and getting the funding, right? Getting into that $1 million funding program. But I don't even talk to you until you've talked about those, until you go to the boot camp, because I don't know what you need. I don't know where you are, but at the boot camp, you will find it all. So let's go to getfundable.com, click on the boot camp, click on the book menu. You're there.
Mm.
Take a look.
And where are the boot camps? Is it changing each location each year?
Actually, it is live. I'm always live, but these are not recorded. They're live and online.
Oh,
So
beautiful.
through Zoom and or Facebook and or we actually broadcast. But here's the thing: it's not like you're just remote viewing. Every single question from every single participant, even online, we answer them. I have moderators at the back table in our studio. They ask the question, I answer it right there live. Nobody, the weekend does not end until every question is answered. So getfundable.com. Click on the boot camp, the book, or even the podcasts are there. I think it's under blog or podcast. Click on there and it'll take you to our list of podcasts. Listen away.
Wow.
Binge, because I'd rather have you listen. I mean, don't have to wait, but if you're going to binge the podcast, then come to the boot camp, you'll be on second base already. Because imagine this is a few minutes. Imagine hours and hours and hours of here's a teaser. There's actually 150 measurements, FICO measures. They haven't. The new versions of the software will have those. If you know what to do in advance, you'll already be step ahead as FICO releases newer and newer versions of their
that's amazing. It's
scoring software.
Because it's so many. Yeah, you definitely have to listen to the podcast, go to boot camps. There's just so much moving pieces. You need, like I said, expert team like yourself to kind of help you through that process. So wow, really appreciate that. So we got the book, got the podcast, and the boot camp. For the listeners to learn a little bit more about you, what's kind of like a typical day for you? Do you have any special morning routines?
Oh, actually, I have. Yes. So I'm getting back into working out, but right now, taking walks is my jam, right? But when I go out, one of the things that I love to do is I want to stay in touch with everybody who's part of us, whether you're a client, you're a student, you haven't done anything, right? You've just given an email because you got the book or whatever it is, right? If you're, I do a what I call a nurture series of emails, some 2 to 3 times a week they go out. So I go on walks and I'm pulling my daily experience for my family. I just went camping in Moab and just survived what felt like a monsoon, right? Me and my girlfriend in a little tent, right? Hunkered. But one of my favorite things to do in the world is to draw parallels of our lives, right? And so that's what these nurture emails and videos are, is just me telling the stories about things that I notice, things that I see. Well, on my walk, I tell those stories. And then my team gets them into an email, so they end up, I don't know, 270 days later, you're still getting, I want to educate and entertain, and I want to knock you on your hindquarters, right? I want you to not settle for normal or regular or mediocre. And that's what, so that's my morning routine is
Awesome.
to go out and kind of translate tell the stories of the world, but bring them home and give them to my tribe, give them to my, the people who have found some value here. And I just want to keep inspiring you to be amazing and to see what's actually alive in your world that you might be missing. Right.
Absolutely. Awesome. I always ask all my guests this question is, what are you most grateful for?
People who believe in me, because I've been climbing a hill that we got billion-dollar industries that are all been breathing down my neck for 20 years, right? Because we're teaching stuff that they've kept hidden for years and years and years, right? And my children have believed in me. My daughter has an 820 credit score and is working on her second fix and flip, right? I mean, we're a believer. We get together for family reunions and we're talking shop on credit profile optimization and stuff. I mean, it goes deep. It's in the blood, right? So my children have believed in me, right, and have implemented and become have their own amazing stories. My team, I've got some of my team members been with me for almost a dozen years, and others that have been here for a year or two, and they believe in me. They believe in what we're doing. They see it and they're like, are you kidding me? Why don't millions of people know this yet? Right. And so they are doing the boot camp coordinators and onboarding teams and my advisors to our clients and students. They're just spectacular human beings who believe, who want more people to know about this. And then I'm grateful for my students and my clients. I have a group of people in my client base. I affectionately call them crash test dummies, because they're like, hey, give us something new to try, right? I don't care if it's 5 points or 15 points. And I never lead them astray. I never give them something that's going to harm their profiles, but they're like, and most of them, believe it or not, are like engineers and coders. I mean, they're tech weenies like I am. They want to be on the cutting edge, right? I love these guys because they're like willing to try anything. So I am so grateful for the people who are rallying around this banner with me, that I don't have to do it alone. And we're creating this juggernaut. Folks like yourself that are just watching the surprise on your face and be like, the hell is going on here? This is not right. People need to know this, right? That's what I'm grateful for. I'm grateful for that awakening that happens in the human heart when we're like, oh, you mean I'm in charge of my own approvals? What? And then they go all in, right?
Wow. Like I said, this interview has been amazing to me. Like I said, just learned so much. I didn't realize, like I said, how deep this. I mean, I can imagine, but just kind of hearing just a little synopsis of what you're just telling me. And like I said, I'll definitely be checking this out, recommend it to all of our investors and listeners to go check it out. We'll make sure all this information in the show notes.
Yeah,
we mentioned that you had
go to the boot camp.
You had mentioned that you have the book that you would send to the listeners. Yes.
Yeah. So I've got for special circumstances, I have if I'll cover the cost of the book, guys, if you'll throw in for shipping. I would love if you go to getfundable.com and click on book, order it. You will notice that it is only for shipping costs. It's a few bucks. But if you will cover the cost of shipping, I will cover the cost of the book. I want this in your hand. Then listen to the podcast. Then go to the boot camp. But just get so you can kind of see what we're doing together. And there's some. It's a roller coaster in that book. You're going to learn a lot more about me than you ever wanted to know. Sometimes it's like, I don't know if you guys like the DC Comics universe. It's a little dark sometimes, because where I learned optimization was an insanely inspiring and powerful story all on its own. So yeah, go to getfundable.com, click on the book. I will, it's just shipping alone, and let's get that in your hot little hand.
Awesome. Merrill, thank you so much. I mean, man, it's just a pleasure to speak with you. Like I said, you got so much energy. It was fun. Like I said, you're charismatic. I mean, like I said, everyone's going to enjoy this interview. So Again, thank you so much. We'll make sure all the information and links are in the show notes. Have a blessed rest of the week and look forward to connecting with you again soon.
Thank you for having me on. Hey, love to your listeners. Thank you very much, sir.
All right. Take care, Merrill. Bye-bye.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.